afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are mirroring positive global cues and are holding on to gains. The Nifty trades close to the 11,700 mark. Pharma and PSU banks are the sectoral laggards. Tata Motors continues its merry ways. The stock, apart from being the top gainer on the Nifty, is up over 30% in the month of April. TCS is also among the top gainers in Nifty after its fourth quarter performance. It is also the top contributor to the Nifty today. On the other hand, Infosys is the top loser in the Nifty after a subdued margin guidance given by the company for FY20. And Metropolis Healthcare is trading with solid gains after it listed at a 10% premium to its issue price. Good afternoon, Neeraj. And well, it's been a good start to this truncated week. Nifty's marching very close to towards the 11,700 mark.
Yep. Welcome back, Navneet, firstly on Countdown. Good to have you back. And yeah, the markets may be looking very chirpy at this point of time. You have to give credit to the fact that we are close to 11,700. The S&P 500, remember, is a stone's throw away from all-time highs. And if that were to happen today or tomorrow, and the global markets remain supportive, then we may well make a dash of those next 70 points and hit our lifetime highs as well on the Nifty. Having said that, in today's session, the banks are supportive. IT is supportive. Despite what Infi has done, by and large, the other stocks are doing well, and therefore there shouldn't be any cause for concern for the IT stocks either. Nifty IT is up 1%, 16,049 and counting. So good going by and large for the benchmark, the large benchmark indices, heavyweight indices, and that only augurs well. We'll talk about the mid caps and the small caps in a bit, but just bring up the heat map and then bring up the turnover picture once. Firstly, what's happening to the market specific stocks? You have Infosys, though even this has recovered a little bit from the lows of the day, but has stayed low. That's the key thing on Infosys. It's not shown any signs of trying to recover even marginally from the levels that it was trading at. Sun Pharma, 1.5%. Reliance IOC marginally off. All marketing companies are slightly off, but more green than red, which is a great sign. What's doing well? Tata Motors is on a roll, really. At some point of time tomorrow, we'll try and analyze what is it and if there are any fundamental triggers behind this. A lot of conversations have happened already. It will be important to put into perspective why Tata Motors has had a nearly 50% retracement from the levels that it was after the results came out. Coal India, strong gains. Tata Consultancy Services. It's one thing for Tata Motors to move up 6%. It's other thing for a large giant like TCS to move up 4% after the numbers. Clearly the street seems to have loved what TCS has done, and it seems to be a day for Tata Group stocks because Tata Steel is the other one which has done really well for itself, up another 3.5%. Autos by and large seem to be doing okay for themselves because Hero MotoCorp and Bajaj Auto are giving company to Tata Motors as well. So rip and roaring for autos, IT and banks. Well, needless to say, you would have a day in the green. What about the broader markets, Devina?
Well, they're resonating what you're seeing on the benchmark indices, but again, truncated week. You're going to watch out for individual stocks and news that move them. And like you said, metals as a pocket is doing well. So even in the broader market space, you're seeing a pickup for the metal space. But I want to highlight a few names individually and then move on. So first off, for stocks which have been gaining over the last 2 days and have seen good momentum, have carried on that trade in today's session as well. A stock like a PC Jewelers, which was up heavily, double-digit gains yesterday, once again is up 15% in today's session. Rain Industries, and we get Darshan to talk a little bit more about this later on in the show, but the stock has had a tremendous run up. I think in the last 7 days it's been up closer to 40%. It's up 9% in today's session. And Tata Motors DVR in tow with what Tata Motors, the stock's doing, that is also up about 6.5%. Metal stocks, so not just the large cap names that Neeraj highlighted. You've got a stock like SAIL, which is doing well, 3.5%. The SAW's moved up about 5.5%. So everything is looking bright out there. Volume buzzers, KRBL, heavy volumes way higher than the last 20 days average. The stock's up about 8.5%, and Himat Seed too is doing well, 4.5% on good volumes, and stocks near their 52-week highs. I think IGL has maintained its position near its 52-week high. So once again, the stock just a few points away, 2.5% higher in intraday trade. Shree Cement is the other one, 1.5% higher, but is just a stone's throw away from its 52-week high. And Gillette has made a new 52-week high as well, so about 5.5% 5% for Gillette. Good volumes on all of those names. But let's take a look at what's happening in the more liquid universe. Navneet is going to highlight all of that for us. Navneet.
Thanks for that, Devina. Well, the picture is looking pretty good this afternoon. In fact, if you look at the futures and the option side as well, we are witnessing some long build-up coming for both Nifty futures as well as the Bank Nifty futures. The open interest up almost 6%. Remember, just want to highlight the premium for this series started somewhere about 90 to 92 points. I think that was the high premium, and now it's fallen to almost 30 points. I don't know if that indicates more upside from the current levels. Historically, if you see, whenever the premium has been on the higher side, we've not seen much of move. So that's come off to 30 points. Bank Nifty futures also this afternoon are witnessing some bit of build up, 6% higher there, and the premium too has fallen from those levels of 170, 200 to around 70 that it's quoting on the Bank Nifty futures. But just remember, markets are up, but India Volatility Index is also up in trade. So just keep in mind, it's inching very closer to its 52-week high levels of 22.5, which was last seen in November 2018. So watch out for India VIX. Let me quickly tell you what are the weekly options indicating for Nifty. The maximum OI is at the 11,700 call and the 11,600 put. So the band was pretty much narrow. Remember, it's a truncated week. There are 3 working days. Hence, the band was pretty much just about 100 points. We're already inching to the level of 11,700 for the day. As you can see on your screen, 11,700 call has seen a lot of OI addition, followed by 11,600 put strike. And in terms of stock futures, have to mention Tata Motors, the way that stock's been moving. Remember, Tata Sons, the promoters have been buying at lower levels right from the month of February. And finally, that move has kicked in fresh long positions seen. The stock's up over 30% for the month. Pull up the futures. That's going to tell you how much OI build up today. 10%, indicating some longs are being witnessed there. And Infosys, on back of earnings, it's seen a reaction on the downside today. Futures, however, see fresh shorts. Call riding seen on the option strikes between 730, 760. I'll suggest for the series, watch out for 700 level on the downside, because that's where the maximum open interest right now for 700 put is in terms of the options, which are very active for Infosys. Lastly, PC Jewelers, that's the stock which has been in focus. I know it's a beaten down counter, but let me tell you, the April futures open interest just today single-handedly is up 50%. It is very closer once again to entering into the band. I was just checking at the market-wide position limit. The stock in the last 2 sessions is up almost 30%, and in today's session itself, the OI is up nearly 50%. Guys.
Well, interesting what's happening to the markets at large. There is some bit of optimism. Let's try and figure out if the world will echo that optimism or no. Begin the show with a global voice, Piotr Matys. He's the emerging market strategist at Rabobank, who's joining us right now on the show. Piotr, good having you. Thanks so much for joining in. I hope I'm pronouncing your name correctly.
No, that's perfectly. Thank you for having me on your show.
Okay. Well, let's talk about how do you think the markets would be? Would they be near perfect in the week to come, or do you reckon that there could be some concerns around the global growth? Because the S&P 500, as we speak, is what, a stone's throw away from all-time highs. If that does happen, what's the reaction on the emerging market enthusiasm?
Well, last week was quite interesting because until Friday we had concerns about global economy dominating across the markets, and then on Friday morning when Chinese data was released, those concerns eased and positive sentiment dominated at the end of last week. Apart from encouraging Chinese data, we also had positive comments from Treasury Secretary Mnuchin, who indicated that trade talks between US and China are going well. So suddenly it seems that markets dismissed concerns about synchronized, as IMF put it, slowdown in global economy. We are going to take fresh clues from upcoming data scheduled this week. Obviously, focus is going to be on Chinese GDP growth on Wednesday, and also we are going to look for fresh clues from the US economy. Probably the main focus is going to be on retail sales, given that consumer spending is the main driving force for the US economy.
Piotr, if indeed the Chinese data seem to suggest that the economy is on a firmer ground, let's work with an assumption that China economic data gradually over the course of the next 6 months turns out to be better than what it is right now. What do you think happens to flows? I mean, India and the other EMs would be a fraction of what goes to China, maybe even less. But with all that's happening around the world, do you reckon flows and country-dedicated flows could now come into being? Because hitherto, in the months of February and March, what we've seen is largely ETF flows making their way into emerging markets. Would now geography-dedicated flows start coming in?
For sure, signs of stabilization in the Chinese economy would be positive for emerging markets, especially for those who are very closely correlated with China. That said, if you look at what has been driving this stabilization in the Chinese economy, it's mainly another substantial credit stimulus. And we are skeptical that it's going to prove sustainable. So at some stage, the Chinese economy will probably again slow down. We are also seriously concerned that the US economy is heading for a recession at some stage next year. So the way we look at emerging markets at the moment is the following. We are in this period of opportunity that maybe is going to last for another few months, based on the assumption that trade talks will continue in a positive mood, and that we won't see any fresh warning signal from the Chinese economy, but it's not going to last. So yes, emerging markets are looking attractive at the moment. Valuations are still relatively low, and another way of inflow into emerging markets cannot be excluded. But in the second half of this year, maybe Q4 and early 2020, we expect sentiment to deteriorate significantly, to trigger outflows from emerging markets, and this will be triggered by growing concerns about US recession.
Taking your point forward of the inflows, well, the Indian markets have rallied owing to the sort of FI inflows that we've seen in the last 2 to 3 months on back of stronger rupee. So if you're anticipating that the flows will move out of emerging markets, could you just pinpoint the markets from where you see maximum outflows?
So our assumption is that capital inflows into emerging markets will slow down in coming months, and at some stage we are going to witness reversal of those inflows. What is absolutely crucial is that emerging markets tend to perform the best when the outlook for the global economy is positive. And we witnessed exactly that in 2017 and until early 2018, when you could bet essentially on any emerging market and you would make money. But if you look at the performance of emerging markets so far this year, you can see that clearly there are winners and losers. The Russian ruble is leading gains, and at the opposite side of the scale, you have the Argentine peso, the Turkish lira. Those two currencies have been the laggards of emerging markets. And this significant difference in performance of EM currencies is coming from the fact that investors are not convinced that the worst is over for the global economy. They are not convinced that that we are going to witness improvement in the outlook for the global economy. That's why we are not seeing significant inflows. Those inflows are slowing down already, and as I said, will be reversed if our negative view on the US economy materializes. Because again, it's important to point out that at the moment, our house view that the US economy will be in a recession next year is a non-consensus view. So if data confirm our concerns about the US economy, then this will lead to deterioration in sentiment towards emerging markets and outflows.
Okay. Piotr, one final question. What's your view on India?
India is an excellent example of how important domestic issues are. And if the administration receives a strong mandate in these crucial elections, then there's a chance that economic fundamentals will strengthen, that economic reforms will be implemented, and India will benefit from that, in addition to some signs of stabilization in China as well. And given our pessimistic view on the US economy next year, it is even more important for the administration to make progress on implementing reforms after the elections, in order to provide the currency with sufficient level of insulation against potentially negative global backdrop. And you could make the same argument for Turkey and other EM currencies. So it's absolutely crucial to make progress on reforms.
All right, Piotr, thanks very much for joining us. Appreciate you taking out the time this afternoon and sharing your thoughts with us here.
Thank you.
All right, global opinion coming in there. India still looks well placed in the larger scheme of things. Moving on, now let's get our discussion going on corporates that have important news flow around them. APL Apollo is a stock that's in focus this afternoon. The company has acquired Shankara Building Products Hyderabad-based production unit. The unit, having a production capacity of 2 lakh tons per annum, was acquired for 70 crore rupees. Let's discuss this in greater detail with Ashok Gupta. He's the managing director at the company. Mr. Gupta, thanks very much. Could you highlight a little bit more in terms of the contours of the deal with us, and then we talk about what this brings on the table for you?
Good afternoon and thank you. Shankara Building is a large retailer in South India dealing in building products, and they also have significant manufacturing capacity for steel pipes. One of their subsidiaries, Taurus Value Steel and Pipes, have 2 plants near Hyderabad, and we are acquiring one of that plant, which is a larger plant having 200,000 tons capacity. Along with that capacity of making pipes, they also have a galvanizing line and a sheet galvanizing line. So all that we are acquiring for a consideration of 70 crore rupees. What we are gaining out of the scheme is not only capacity to build pipes, we are already working at 80-85% capacity and we need more capacity. More than that, Shankara is a significant competitor to us in that market. With this, we will have one competitor less. It's an important market for us, so it becomes a big advantage for us. Over and above that, Shankara is also agreeing to buy around 250,000 tons of pipes from us on a regular basis, which are produced from all other plants. So that, in addition to that, we are also getting a product mix which is almost complementary to our own product mix. So all in all, it looks to be a good strategic buy for us.
Are there any other elements of competitive strength that you see in your favor via this particular deal?
This unit is located in Hyderabad. Currently, we are feeding the market of Hyderabad either from Hosur or from Raipur, which both are quite far away, and we are paying significant freight charges for shifting the material. The unit being in Hyderabad itself, we will be saving on the freight cost. Secondly, the unit has significant capacity of GI and GP. On both the fronts, our current capacities are being fully utilized. We do not have spare capacity. We will have to build new capacities, and we don't have space in our plants to make new capacities. We have to buy land. So we are getting freight savings, and we are getting additional capacity of value-added products. So somewhere where we need them immediately.
So just to throw some more light, I mean, you are going ahead with this acquisition. You're already running at an 85% capacity. Is there an expectation that demand is expected to grow exponentially?
Actually, demand for a steel pipe has already been growing at around 7 to 8%, and a significant part of that demand is being met by us. As you know, we always tend to grow at around 20-25%. This year also we have grown at around 19%. So demand is steady. Demand is growing steadily. It's a good sector to be in, and demand being good, capacity being limited, we have to create more capacity. We are creating more capacity wherever possible. And inorganic growth is always welcome in such situations.
Mr. Gupta, the unit that you've acquired from Shankara Building, I think that garnered revenues of between 700 to 750 crores for FY18. If you could just give us the sort of contribution that this unit will bring to your overall financials going ahead, and also what sort of margins were they doing?
Currently, this unit, as you were mentioned, they were operating at around 700 crores or so. Now, because of low level of operations, their purchasing power was not so good. So their raw material prices were higher. We will bring to the table better raw material prices, lower freight cost, a bigger market already available to us. Currently, we are selling around 10,000 tons in that market. We will increase our market share in southern region, particularly in Hyderabad and Telangana. So overall, it should give us an increase on bottom line significantly. On top line, we hope to get another 1,000 crore from this in next 2 to 3 years. And all our EBITDA margins should also improve because of the lower freight cost and a better product mix. So on account of revenue, on account of product mix, on account of margins, we should see improvements.
Okay, just my last question. You said you expect significant contribution in the bottom line. Can you just quantify that number for us? You can just give us a range, a ballpark figure or something.
See, currently, our EBITDA margins are varying between 3,000 to 3,400 per ton on an average basis. With this higher product mix and lower freight cost, we expect the EBITDA margins from this unit to be a bit shade higher than that.
And how do you plan to fund this deal? Would you also look to actually ramp up the current capacity? Because I think the plant is just running at 40 to 50% capacity.
Yeah, obviously. We will run definitely at 80-85% capacity within 2 years. And we are funding it entirely from internal accruals. The price is only 70 crores, and we will, during the course of a year, we will have sufficient funds to take care of this.
All right, Mr. Gupta, we'll leave it at that. Thank you so very much for joining in and giving us that perspective and an update on this particular deal. So, as per the management, this is definitely going to be a great addition in terms of their revenue numbers as well as what they plan to do going forward.
Yeah, this is interesting though, that we're talking about consolidation happening throughout industries, and I think he started off this conversation saying that
competition
this would
is
mean one competitor less. So it's very interesting as to how people are viewing acquisitions as well. A lot of times, maybe it's an expensive acquisition, maybe not. A lot of times it makes sense just to have a competitor out of the business.
One of the brokerage notes said it's a distress sale because I think it's happened at 3.5 times EV to EBITDA. It's less compared to where the peers are currently trading. So I think it is viewed as a distress sale by one of the brokerage notes I read.
Well, then a twin benefit for APL because one competitor less and it's come at a good price.
Shankara was expanding at a very big pace, I think, in the last few years, and they've been facing working capital issues. I think they want to reduce the debt and ease
they have to badly because just look at what's happened to the stock, right? From 2,000 rupees to 500, I think they've been clobbered out of shape.
But it's interesting that they've actually managed to, while they're doing this deal, they're actually getting Shankara Building Products to commit to buying from them as well.
Well, that must be a part of, I mean, there must be an ongoing client.
Company,
an ongoing client which may not necessarily differ, but not the only difference is that Shankara Building Products unfortunately hasn't quite reacted any positively.
It's down 70% last 1 year.
In the last 1 year, but in today's session down about 2.5% and not quite moving up in trade.
Okay, that's about Shankara Building, but let's move on and let's begin with the newsmakers of the day. Wholesale prices rose 3.18% in the month of March, driven by a pickup in food inflation. Shefali Malik is here with more details on that. Shefali, over to you.
Well, first, the headline numbers, the WPI for the month of March came in at about 3.18%. So that's an increase for the second straight month after a fall for 3 consecutive months. We've seen the CPI numbers as well yesterday, which came in at about 2.9%, which was a 5-month high. And the culprits in the case of WPI as well are again food and fuel, which both rose this time around as well. Food articles inflation came in at about 5.68%. So while in WPI, the food inflation has been rising since last 3 months, but in CPI we observed that it actually turned inflationary after a couple of months, seeing the deflationary trend. Vegetables inflation rose by quite a steep number of about 28%, primary articles inflation about 5%, fuel and power about 5.4%, and within the fuel and power index we actually saw increase coming in across petrol, diesel and LPG. Manufactured products inflation, which carries a maximum weight on this index, that rose by about 2.16% versus about 2.25% on a month-on-month basis. But more important than WPI, we know that CPI carries much more weight when RBI considers its rate actions, and we've already seen that CPI rose this time around. It was at a 5-month high, and IIP on the other hand was at a 20-month low, rising by just a 0.1%. So that probably means that we can see continued rate action by the Reserve Bank of India going ahead.
Thanks for that, Shefali. So that's, of course, what's come out in macro data over the weekend, post-market hours, Friday. What's happened during market hours all of last week and in today's session is that Rain Industries has continued to gain. Now, it's gained nearly 38% in the month of April, is up about 9% in today's session as well. And as per the company's annual report, business restructuring in India and abroad will be the focus going forward. Darshan Mehta joins us with the the details of the annual report and the possible reasons why Rain Industries might be raining gains on the bourses. Darshan.
Yeah, so you're right. It's up 38% this month, and if you see the volumes that have come across on the counter, that also indicates that there has been delivery-based buying. So if you see the last few, but the bottommost corner, you can see clearly that buying has happened along with high volume. So you can clearly see that that is there. The other part is look at the bonds. Now, Rain Industry has the bonds that are listed in the US markets, and the rally in the bond actually started much ahead. So the yellow line is the bond, the white line is the equity, and the bond actually managed to move in much ahead of the equity, indicating that their US subsidiary, that is Rain Carbon, that seems to be doing well, and that was the precursor to the move that came in as far as the equity was concerned. The other part is that business seems to be doing well because there is one competitor which does exactly what Rain Industries does, and that is coppers. Now, if you see the price of coppers, that actually has managed to rally significantly, and that has been steadily going up. So that is something that has done well, and because of that, Rain is also reacting. Now, in terms of the annual report highlight, one of the key reasons that they have said is that there is debottlenecking at the German distillation facility. The second part is the expansion of the Indian blending facility. Both of them will lead to a lot of cost optimization for Rain Industries. They are saying that they believe that the global aluminium production is improving. They say that the electric vehicles that are used will use in more aluminium as compared to the traditional car, and they are seeing a lot of traction coming there. They are saying that the capacity utilization across the US industries is becoming better, and that is why their sales is also going up. As far as the restructuring is concerned, the restructuring in Europe is done, and that will aid them to a lot of cost, and that will help them as far as their margin is concerned. And on the cement business, which is not a very large part, but that's the business that they operate in India. They are saying infrastructure is something that sector is reviving, and there is a lot of positive traction. What was the outlook for 2019? The first is that they are saying that after a weak year that they had in FY19, they expect they may return to more normalized earnings going ahead, and they're looking to manage the balance sheet much more aggressively and cutting costs. Remember, debt is a big problem for Rain Industries because they do a lot of leverage buyout. The last time the stock had corrected, they had done a leverage acquisition of Rutgers. No doubt they managed to turn it around. The fear for Rain Industries always remains any type of leverage acquisitions that they do. Right now, the debt has actually is actually higher for Rain Industries, and they're saying that they're looking to manage the balance sheet better, and that is something that we need to watch out for.
All right, that's Rain Industries. The stock nonetheless has been an outperformer over the last 3 to 4 trading sessions and has moved up quite smartly on the back of good volumes as well. So I think the last 4 days they've had positive closes. The bigger move happened yesterday, and today a carry forward of that. It's just a smidge below its 200-day moving average as well. Well, moving on, the biggest increase in SBI mutual funds portfolio has been in Vodafone Idea. It has also sold off its stake in some Reliance Group companies in the month of March. Yash Kapadia is here to take us through the portfolio rejig. Yash, good afternoon.
Good afternoon, Devina. So clearly it has been a busy month for SBI Mutual Fund in terms of the stocks wherein they have increased their holding. Vodafone Idea tops that list with almost 4 crore shares added there in the previous month. Some heavy buying seen in the likes of ICICI Prudential as well as Tata Power. 3.5 crore shares there as well as 1.5 crore shares in Tata Power, along with SBI and Ambuja Cement, all of whom have seen buying anywhere between 58 to 82 lakh shares. But a clear trend emerging in the companies wherein they have reduced their holding, with the oil and gas and metal names featuring there. So HPCL has seen about 81 lakh shares sold, similarly for Equitas as well. But Nalco, Group Finance and IGL, all of them have also seen selling of anywhere between 74 to 20 lakh shares in the previous month. Moving on, what are the stocks that make it to their portfolio for the very first time, and which are the ones that go out completely? And again, it's a mixed bag over there, because we've seen Reddington India seeing fresh buying of almost 62 lakh shares. Gujarat Pipa, V2 Retail are the other two names which have seen buying of anywhere between 13 to 11 lakh shares. And lastly, followed by Endurance Technologies and Sanofi India. On the other hand, like you mentioned, they have reduced their holding in some of the Reliance Group companies. So Reliance Capital and Reliance Infra feature there. Almost 7 lakh shares sold in Reliance Capital and about 6 lakh shares sold there. But Everest Industries is where they have sold the most, and it goes out completely from the portfolio. About 8.2 lakh shares sold there. And while they preferred, Endurance Technologies, they decided to completely sell off Varroc Engineering, which was just recently listed last year. Close to 5.5 lakh shares sold there, as well as Arvind, which has seen selling about 3.2 lakh shares in the last month. Back to you.
This is interesting. Yash, if I can just ask you one follow-up very quickly. Is there something that has stood out as a common trend between all the 3 large mutual funds?
Neeraj, actually, Vodafone Idea has seen buying by both SBI as well as ICICI Prudential, so that really stands out for me.
Interestingly, even in the morning when we spoke to Avinash, she said that,
no, Pankaj Murarka.
Pankaj Murarka, yes. I'm sorry. So he said that Vodafone Idea could actually be a stock that now is coming out post its right issues. It's settling its balance sheet in a good way, and that could be an upside for the stock, considering the way so badly it's been beaten down.
I think also the news of the promoters subscribing to almost 20,000 crore. The figure's gone up from 18,000 for the rights issue. That's played a positive sentiment for this one.
Yeah, the only spanner in the wheels would be, what if Reliance, and as the SBI Caps analyst was saying, what if Reliance were to launch 5G earlier, and then therefore what it does to further funds requirements for a Vodafone Idea. But I think the opinion is split right down the middle. Some people believe that it will be a 3-horse race. Some people believe it may well become a 2-horse race.
Let's see. After this entry of Reliance Jio did trigger that wave of consolidation that we witnessed in the telecom
No new
industry.
entrants for sure. That's something that we can safely bet upon, right? There won't be any new entrants. If at all, there will be 3 players. If at all, there will be 2 players.
All right. That remains to be seen. Let's move on and talk about the other sector, which is the metal space. That's having a good run-up in today's session. In fact, because of positive data that we've received from China, I think the Nifty Metals Index is the top sectoral gainer. But nevertheless, they're focusing on steel makers. The Indian steel makers have had a good run in the last financial year. The lower production in China meant pricing remained stable, and all the players did manage to increase their plant utilization levels. Nikki Mirchandani joins us with more details on that one. Nikki.
Well, steel players have reported pretty muted set of numbers just on the face of it for FY19, both in terms of production as well as sales growth. Tata Steel and JSW Steel have reported not more than 2 to 3% growth for FY19. Even in terms of sales number, it's been pretty flattish out there. But then sales somehow seems to be catching up, both in terms of the volume growth and on terms of production as well as sales side. But including for Bhushan Steel, Tata Steel has reported clear set of good numbers, surpassing all the other peers. Let's just get on to the production numbers first, where you'd see that JSW Steel has managed to deliver same sort of growth even for FY19 as it did for FY18. For Tata Steel and SAIL, the trend actually seems to be contrary, because Tata Steel has reported the slowest growth at least since FY15, whereas for SAIL, if you look at the production volume, that's the highest that we've seen since FY15 out there. Sales volume, if you look at for all the steel players, it's pretty much flattish. A little better number coming in from sale, and if we include Bhushan Steel, obviously for Tata Steel as well. But on the face of it, they again look very flattish. Now, one needs to bear in mind the fact that these numbers come on a base of a higher optimum utilization level for all the steel players, especially Tata Steel and JSW Steel, which are operating at a capacity of more than 90% plus, 96% in fact for Tata Steel, and JSW Steel too has been operating at a capacity of more than 90% for FY19. So registering a number on top of that growth is clearly a difficult task for these players, which means that also one of the reasons perhaps why these steel players have been expanding their capacities both organically and inorganically. Typically FY19 has been a good year for steel players, but then the growth outlook per se for these steel players is cautious. In fact, brokerages remain divided on this one. Morgan Stanley has suggested that steel players are expected to clock a growth of around 6.5% for FY20, where it was 6% in FY19, clearly on account of capex recovery and a pickup in consumption cycle, which is expected to aid the steel demand. However, there seems to be a bit of concern for the steel industry because the net imports of the industry as a whole, they've been growing, and that's probably one of the factors that these steel players also have been highlighting in their Q3 commentaries. Net imports, if you look at the figure and compare it as compared to the previous year, they might have receded, but still remains to be a cause of concern for the industry. In fact, SAIL and JSW Steel in the Q3 outlook for the financial year FY20 have suggested that they're concerned on growing imports mainly from FTA countries. Back to you guys.
All right, thanks for that, Nikki. Let's get in our experts on board now to talk about what the markets could do in the near to the medium term. We are closing in to 11,700. Hemen Kapadia of KRChoksey Securities, as well as Sumeet Bagadia of Choice Broking with us on the technicals, and in a bit Sameer Kalra, actually Sameer Kalra of Target Investing with us on the fundamentals as well. Gentlemen, all of you, good afternoon. Thanks for joining in. Hemen, let's start with you first. Good move today. Kissing distance of all-time highs. Would you initiate longs? Would you initiate shorts? Would you do nothing? On the index first.
I'll prepare a escape route first, Neeraj. 29, we've not sustained about 27 PE trailing. VIX is 21.5 going to 24. The option data, highest calls and puts in the series, is the lowest in the last 2 years. The Nifty future OI was 1.58 crores, is 1.51 as of Friday. There's a lack of participation. Volatility is going to go up. Indicators are sell on the daily chart. We should have broken 11,550, which hasn't happened. This is the useless data that I'm giving you. Realistically, range between 11,550 to 11,753. If it gives a unlikely breakout of 11,753, we go to 12,000.
No, so what do you do? That's my question. Let me now put you in a spot. Your escape route is done. What do you do now?
Okay, I would suggest selling the 11,500 put option. This month is 23 bucks, which is useless. So I'm selling the next month. The IVs are 24. I don't expect to wait till 23rd of May to decide where I'm going to jump. I have a feeling the longer it remains range bound, we're going to erode some of the value. So I would sell the 11,500 next month put option.
So you're suggesting that 11,500 will be a good base for this market?
Frankly speaking,
even after the election result, because that's going to call for stomach-churning volatility.
No, but I told you, I will not wait for the results.
You will not?
In the next 2-3 weeks, there will be ups and downs, and I believe the premium will erode, and I will not, like I said, I will not wait till 23rd of May. I'm going to square it up before that. Frankly speaking, we moved 1,150 points. You can't have a move without even a 38.2% correction going up. 11,550 should have been broken. It didn't for whatever reason. So the undercurrent is strong. So I think 11,500 is a make or break level.
It's interesting because, you know, it's not like we've just flattened out. We've come off a bit, but there's not been any sharp correction. You're actually perched with the India VIX at those heady levels. And the markets just seem to be waiting for some form of news flow to take it as a trigger to move higher, because there's definitely more cushioning on the downside, it looks like it at least.
Absolutely, Devina. If we don't break 11,550, we made 3 attempts in the last 2 weeks. Didn't happen. We've not broken 29,700 in terms of closing for the bank Nifty. So despite what I think the market would warrant a deeper correction, keeping in mind the quantum of the rise, it doesn't want to go down. Like you said, it's perched. And now an unlikely, like I said, unlikely upside seems to be around the corner. So I guess it's a slightly senseless market from my point of view, whether it's elections, lack of participation, either way. But coming back to your main question, yes, it's strong, it's not breaking, seriously.
Lower OI, as you mentioned, for Nifty futures. I was checking that data. Does that also suggest the upside could be limited going ahead because the participation is limited?
Yes, see, I think, Navneet, in the last couple of years, we started at 1.08 crores Nifty OI last month, if I remember correctly, because of the geopolitical tension with Pakistan. I think there's a last 2-year low. After that, we are at around 1.5, and I'm not taking the
8 or 9 month low, I guess.
Okay, so, I mean, the OI interest, it used to be 85-90 lakhs 1 year, the highest series in the call put, Navneet, which used to be 45-50 lakhs, is now 22 and 29 lakhs. So it's obvious, okay, VIX is high. I mean, this is obviously the precursor to the elections. So I have a feeling it's going to be stock specific. And coming back to your question, I think with the lack of participation, I don't think it looks like a runaway rally, but the undercurrent remains solid, which I think is a bit perplexing.
Sumeet, Bagadia, what are you doing in terms of trades on the indices, Nifty or the Nifty Bank?
Hi, good afternoon. Well, we are buying the markets. We feel that markets are strong, and if you remember, in last couple of weeks, we have given a buy view only. At present also, we feel that markets are strong, and from here on, we will see, very soon we will see new lifetime high levels, and in fact, we are expecting index to move above 12,000 levels. Any dip in index from present levels should be used as buying opportunity. One can initiate long positions at CMP also. For a trading perspective, 11,600 is the support, so that should be the stop loss for long positions, and for a positional trade, 11,550 should be the stop loss. On higher side, 11,750, 11,800 would be the immediate targets, and the overall targets on Nifty are 12,000 plus levels. Bank Nifty looks good to me, above 30,000 levels. It's headed towards 3,500 or 3,800 levels. One can initiate long positions in Bank Nifty at the current market price. A small dip from present levels till 29,900 should be used as buying opportunity, with the stop loss to be placed below 29,800 levels on lower side for the upside target of 3,500 levels.
Okay. I'll come to your stock-specific ideas in just a moment, but bringing in Sumeet, Kalra as well. Sumeet, you know, I'm going to skip the index question and go straight to the point of you know, our conversations that we've been having on previous occasions with regards to Maruti, and not just Maruti, the entire auto pack that was really under pressure up until now, but sudden U-turn with no major change on ground. So there's nothing materially that's changed on ground, but the stocks have suddenly started to see that big move. And you still stick to your view on Maruti?
So I stick my view on Maruti and auto industry as such. But one small change has happened, maybe for a month it has happened because it's year ending. So generally that trend comes in. What has happened is because of this production cut level which they have taken, whether it's Maruti, Hero, the dealer inventory has gone down by around 60% month on month. So that is a big plus which has happened on the system. So that might have supported this kind of a jump. And that is a relief, but I don't see a short-term or a medium-term trend changing. You don't see it holding? No, I don't see it holding because the retail registrations are still down 2% YOY, and month on month they are 14% up. So they have picked up pace, but because of March ending and year ending, I feel it's always a trend which comes in. So if you see the registrations last year, 2018 March, they were up around 16% YOY. If you see 17, they were up 22% YOY. So that March effect has a seasonality in the system. Whether you contribute it to the corporate end spending or the personal end spending, that's a whole different thing. So I think over there, the trend in the short term and medium term is still on the slide because the production cut was around 15% for the whole industry. Which I think is a very big negative. When your capacity utilization, you know, restricts, then you have a lot of expenditure which comes on the books. So that is kicking in, and I think that you will see in the results. It will not be easy because sales will be fine, but the costs and the expenses will be there over there.
I think inventory levels are coming off. The last time we spoke,
suggested
so that's what I'm saying. So inventory levels at the OEM level are still almost the same, but at the dealer level they are coming off because there is one thing that dealer inventory levels result in a higher leveraged balance sheet. So they were not getting incremental funding. So that the wholesale numbers would have really dropped drastically down if March wasn't taken as a production cut in a major sense. So I think April onwards will come back to a similar trend of, sliding wholesale numbers and production cuts. But let's see. I don't want to anticipate it right now. Yeah.
Okay, let's then get you some strategies going ahead from our technical experts for the day in terms of individual stocks. Hemen, what are you recommending?
I have like I said, a sell on the 11,500 next month put. Individual stocks, I have a buy on Kotak Bank at 1360, stop loss 1345, target 1400. The logic, Navneet, is that we are in an ascending triangle. The stock is on the cusp of a breakout, and this is a 1, 2, 3, 4, 5 week consolidation. It's on the verge of breaking out. And the second stock which I like is Adani Power at 54, stop loss 52, target 58. We remain in an intermediate uptrend. It's taken a breather and we are back in an uptrend again.
Well, that's a remarkable intraday move in Adani Power, and we'll talk about it fundamentally too. But Sumeet, your stock recommendations?
Well, I have two stocks for the day. First one is JSW Steel. Most of the metal stocks are looking good to me. Today's move says that the stock is headed higher, and from here on we can see a move till 310 levels. Those who have not taken long positions, they can initiate long positions at the current market price. One can hold existing long positions with the trailing stop losses to be placed at 287 levels on lower side. For the upside target of 300, that would be the immediate target. Once that is taken away, convincingly we can see a move till 310 levels. The second stock for the day is from auto space, and that is Hero MotoCorp. After a long time, it seems that the Hero MotoCorp has given some good move, and it seems that from here on we can see a very good move in Hero MotoCorp. Stock has broken the recent swing highs, and now it's trading above 2700 levels. From present levels, we can see a move till 2850. So for a trading perspective, one can initiate long positions at the current market price, or on dips in prices till 2650, one should initiate long positions with a stop loss to be placed at 2600 levels on lower side for the upside target of 2800 and 2850 levels.
Okay. Now a couple of stocks to monitor. Firstly, Adani Power, and guys, it's a very interesting intraday move that we're seeing in this stock, isn't it? And multiple people have written reports where CLSA, for example, and their note on Adani Power seems to, well, they have a sell call, by the way. They maintain the sell rating on the elevated leverage and expensive valuation. But if indeed the losses of Adani Power get contained in a meaningful way, then maybe there is merit in the enthusiasm that we have on the company currently, on the stock currently, let me put it that way. The last 7 days about 13.5%. And I just rewinded back to the conversation that we used to have, wherein almost everybody who used to track this space used to say that we are waiting for the judgment to come out. Yeah. And if the judgment is positive, then it should work wonders. The other key thing is something that, again, I think is written in one of the brokerage notes, which says that because the regulator, the seller, all three parties are on the same page, it's very difficult to see the courts giving any kind of leeway on this judgment, and they will probably not look to overturns. If that is indeed the case, and if this is a precedent for the other cases, then you probably have both Adani Power, Tata Power in a very, very sweet spot. So no surprise that this has done what it has done.
I think for Tata Power also, I think on Friday when this particular order came out for Adani Power, it happened because it was just one state involved, and we were talking about how Tata Power, it's probably going to take some more time to get those many number of states on board.
5 states. Yeah, 5 states on board. So, which is why, but it's a very interesting move that we've seen in Adani Power in the session today for sure. The other one, Sumeet, Kalra, which is in news and news big time, is Jet Airways. Now, how does an investor approach this? Tactical trade or fundamentally strong? What do you do with the Jet Airways at 260?
So it's a tactical as of now. Because see what is happening, whatever is happening on the ground is not impacting the stock price, right? So somewhere either it's showing it's already priced in, or somewhere it's showing there are buyers interested at this kind of a price. So I think over there you can play it in tranches, decide a tranche today, because see, for me the biggest signal in the short term which came out was the SBI cap conversion of the pledge shares to equity. Because if you see, they are the same Chinese wall company, if you put in, they are the managers of EOI, right? They're managing. And then the trigger happened yesterday. it wasn't triggered, at a point maybe 3 months earlier or 4 months earlier. There was no situation. So I think somewhere things are getting more firmer in terms of the bids and the scope of what's going to happen in the future. There will be a short-term revival in the system, and it will come out quick because PMO intervention, everything is getting sorted out. So it will push the barricade much more faster. So whatever has to happen will happen mostly in this month. So take a tactical weightage right now. Don't make it a fundamental long-term kind of a weightage, because there are things to be unfolded once the news comes out and everything plays off.
Okay, that's Jet Airways. Let's see what happens in the near future for this company. But currently, majority of their planes have been grounded. But moving on, and let's focus on the company that's Dixon Technologies, which has just acquired a mobile phone manufacturer for around 27 crore rupees. Well, this comes at a time when Apple is actually set to start manufacturing iPhones in India for sale in the country. Joining us to find out more details on this particular acquisition, we've got the managing director of the company joining us, Mr. Atul Lal. Hi Atul, good afternoon to you and thanks a ton for joining us. Could you throw more light on us? What's the rationale of this acquisition? What sort of synergies are you looking to draw from here?
So we were in a joint venture with Jena Group, who are the owners of Carbon brand. And at one point of time, they were also the brand licensees for Panasonic for mobile phones for Indian market. So this JV was formed in 2016 and we started manufacturing. So they were 50% owner of this company for mobile phone manufacturing, which is one of our 5 verticals. So we have been in a partnership with them since then. A year and a half back, Jena ceased to be the brand licensee for Panasonic, and their focus is more on branding and distribution. For Dixon, the core is manufacturing, and mobile phone is one of the largest opportunities for electronics manufacturing in India. And with the policy framework of the government promoting mobile phone manufacturing, and with the announcement of the phased manufacturing program and the growth in this sector, which at present is almost 310 million smartphone and feature phone, expected to grow to almost 500 million by 2021-22. So we seized upon this opportunity and have acquired the 50% share of our partners. So now Dixon is the 100% owner of this particular vertical. And last year we invested and went into the backward integration. So we started manufacturing the motherboards. So we see a great potential in this. And I'm very sure this is going to be a high growth vertical for us in times to come.
Atul, so far I believe mobile and reverse logistics has been a drag in terms of your other businesses that you have. Obviously, washing machine, molding, and you've been getting a lot of your revenues from these businesses as well. But going ahead, since this is an acquisition related to the mobile segment, if you could just give us sort of an outlook, what sort of growth are you looking from here? Let's say in Q3, if you did somewhere about 150 crore, what can be the revenue for the next financial year from the mobile side of the business?
So we feel that in 1920, we're looking at a revenue of somewhere between 650 to 700 crores. We're looking at an EBITDA of 3%, which is somewhere in the range of around 19 to 20 crores. This is a growth in the profitability of more than 250% of Dixon, and a significant growth on the revenue side also. So that way, I think is highly value accretive. The multiple that we have given for this acquisition is barely 3 times the EBITDA of 1920. So those are the numbers.
Mr. Lal, I'm sorry if I missed and if you had already highlighted, but I just want to get you in. If you've already mentioned it, if you could just mention it again for us. This was a joint venture nonetheless with Paget, right? So for you at this point to go ahead and make them a subsidiary and acquire that 50% stake from them. What was the strategic thought process behind that?
So now we are the 100% owners of mobile manufacturing business, and we are in discussions with some large customers. We are fairly confident that just like in other verticals, we have large brands as our anchor customers, namely Philips or Panasonic or Xiaomi. Same thing is going to happen in mobiles. It's going to bring in more energy and more focus. So we are extremely bullish and confident on this acquisition.
Okay. All right, Mr. Lal. Wish you all the best for this acquisition. Thanks so very much for joining us.
Thank you.
All right, that's Mr. Atul Lal. Dixon Technologies in focus there, acquiring the 50% stake of Paget that they were in joint venture, which now making it a wholly owned subsidiary. The stock, though, is not reacting a whole lot much. It's down about 2% in trade. Our guest is still here with us. We've got Sumeet Bagadia, Hemen, Kapadia, and Sameer Kalra. Sumeet, I just want to come to you. We've spoken about two stocks which have been in news, and we've spoken to both the managements. So if you track any of them, one being Dixon Technologies and the other being APL Apollo Tubes.
Well, see, APL Apollo looks good to me. What we are seeing in this stock is that the stock has given a good move from lower levels. In last 2 months, we have seen a very good move from lower levels, and now from here on, there is a possibility that we might see a extended rally in which we can see a move around 150 to 200 points from present levels. Those who have taken long positions at lower levels, they can hold on the existing long positions. One can go ahead and initiate fresh long positions at the current market price, or if there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. High side, the resistance for the stock is placed at around 15-20 levels. Once the levels are taken away, we can see a move till 1600 or even till 1700 levels in next 3 to 4 months time horizon. It's better to be on buy side in this stock. One can initiate long positions at the current market price, or if there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity.
Okay, that's a technical call coming in there. I just want to pull up the chart of Godfrey Philip. There's been a sudden buying which is coming into this counter. I think now it's almost at the high point of the day, up 4.3%. I think, last week, one of the trading sessions, there was a huge spurt seen in terms of OI build-up as well for Godfrey. How is it looking on the chart, and what do you make of the current move?
Yes, I think big volume spike, not a very liquid stock, no need. 5 lakhs NSE cash market, and we still have half an hour to go. We were in a 3-week range, Navneet, between 1100, 1180, and we've actually broken on today. Assumption is that we will close above 1180. That happens, I think we are moving towards 1240 and 1290 over the next few weeks. So we remain in an intermediate uptrend, and frankly speaking, it's a fresh breakout coming in today, Navneet.
Tata Motors DVR is the other one that you should watch out for. The stock's up about 6.5%, going neck and neck with what Tata Motors as a stock has been doing. But if you had to trade, Hemen, would you trade Tata Motors or would you trade DVR?
I think simply because there is more participation in Tata Motors, that makes deciphering technical patterns that much more easier. So I would prefer to trade Tata Motors vis-a-vis DVR.
We need to take a break, so we'll have to do that. Sameer, I'll request you to stay on, because when we come back, we have to talk about TCS. That stock is at 2107, 4.6% higher in trade. Remarkable move in the session, and it's carried along the IT index along with it. So while banks are doing what they're doing, IT is packing a serious punch, and when nearly 45% of your Nifty weight is doing well, you would have the index in the green. That too is trading at the high point of the day. We'll come back and talk about that. Stay on, lots more to talk about, as I said. We also get you the Fab 4 stocks of the day on the other side at 3:15. We get you what dealing rooms are recommending in the session today at 3:20. We'll also get you what our experts have to recommend in terms of closing strategies. Stay tuned to Bloomberg Wind Live.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught. There is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Better?
Same.
Now?
Abhi? I think so.
Sometimes we can't see what's right in front of us. And when it's clear, then the big picture becomes fuzzy.
Perfect.
The right lens always is.
Back with Countdown right here on Bloomberg Quint. We are doing very well. The 200 points up for the Nifty Bank. And just a quick check of what the world markets are doing at this point of time, because while we are in the green, it's also important to take stock of what the world is doing. So European indices will come up on your screen. Flattish, but nothing too untoward. The S&P 500 is about 23 points away from all-time highs, 2911. Right now, the futures are pointing towards a flattish start as well. So no negatives, but no positives either. The turnover should come up on your screen, and let's just quickly see what our volumes are looking in the session today. Not too great, but I think on the cash market side, we have a chance of nudging that 30,000 crore mark in the next half an hour. Let's wait and watch if that happens or no. However, let's first tell you, before we get back to our guests, as to what's happening on the Fab 4 stocks of the day list. Yash Kapadia is here with that list of his. Yash, good afternoon. What's made it to your list?
Good afternoon, Neeraj. I'll start first with TCS. We had the two IT giants come out with their numbers, but TCS clearly stands out after reporting higher than the street estimates. The management guidance too was positive, having guided for a stable margins outlook for FY20, and on the back of which we had Macquarie come out with a report wherein they have maintained the buy rating, but have also hiked the target price to 23.63 now. Going on forward, we also have Metropolis Healthcare, which makes its a stock market debut. The stock is up about 11% from its issue price of 880, and it had received a strong response to its IPO, getting oversubscribed by almost 6 times. So watch out for that. IGL has hit a fresh record high in today's day of trade, up close to 3% at this point in time. There was a brokerage report from Citi as well, wherein they have maintained a buy rating and have also hiked the target price on the counter, citing strong earnings growth going forward. And lastly, watch out for Godfrey Phillips. It's up 4.5% at this point in time, and we've seen a big spurt in terms of open interest, which has increased by almost 14% in today's day of trade, which indicates that there are fresh longs building into the system. Back to you.
Thanks a lot for that, Yash. And if you want to pull up a set of charts which shows the differential in the valuations between TCS and Infosys now after the move today, which has widened even more. I think it's 18 times to 23 times between Infosys and TCS. Sumeet, Kalra, before we thank you, what do you do with the IT majors now, the large cap IT names and TCS in particular?
So I think you can hold on to the investment, whatever you have, because in valuation terms it might seem a little expensive as an IT company, but I think the growth they are delivering is good enough, and the buybacks and dividends help out the premium valuations as well. But I don't see a point of doing a new purchase as of now, because I feel the margins are somewhere or the other either going stabilized or going downwards. So see a couple of quarters for both of them, because I think Infosys after 3 quarters, when the investment phase gets over and this whole cycle of, coming out of the woods will be done, I think Infosys will become much more attractive than TCS at that point of time, not right now.
All right. Sameer, we'll leave it at that. Thank you so very much for joining us this afternoon. Sumeet, Kalra there with his views. Bringing in Dharmesh Kant of IndiaNivesh Securities. He's also joining us on the show this afternoon. Good afternoon to you, Dharmesh. How are you positioning yourself and what are you advising to clients at this point? We're in a phase of consolidation. Do we use that as an opportunity to enter?
Yeah, good afternoon. Yeah, we are, I mean, last 10, 11 days, what the market has seen is a kind of a consolidation happening. But the bright side has been there has been value buying happening in this consolidation process, and some of the beaten down sectors are seeing investors' interest coming back to them. For example, automobiles, which has been beaten down to a quite extent, and I think there are a couple of quarters more before the actual numbers start turning around. But stock market is always forward looking, and in IT major we have been recommending to buy TCS. My own sense is that FY20 they would be reporting an EPS of around 102 kind of a thing, and on that basis, even if you give it a 25 kind of a P multiple, 25-2600 is the price target which is coming. It has clearly outperformed Infosys in all aspects, and digitization they have picked up well. In spite of volume growth, they have able to maintain the realization and margins in place. So it's a clear buy with a ROE of more than 35 and still trading at 23 kind of a PE multiple 1 year forward. So there's a huge gap if it gets re-rated, and my own sense is it will get re-rated. So that's a clear buy. Apart from that, BFSI stands buy on every correction, so that we are buying.
Okay, well, talking about the IT pack, do keep an eye on Wipro as well. I think the board meeting is lined up tomorrow with regard to the buyback and also the numbers. Let's see how that pan out for Wipro. Just quickly, I want to address the metal space. The Nifty Metals Index is your top sectoral gainer for the day, and the reason, I think the change and shift in sentiment, I'll call it, after good data coming in from the Chinese market with regard to be it the credit data, the trade data, particularly I guess the exports went up 14%, whereas the expectation was it would go up by almost 7%. So that's lifted the sentiment back home with regard to all the metal counters, be it Steel Authority. Tata Steel is the other one which is shining in trade. I mean, on the charts, is there any metal stock that you would initiate a trade on?
I think the ones which I like, I mean, Tata Steel and all have already moved a bit. So I would like to go for something contra which hasn't moved much. I think it would probably be a toss-up between Nalco, which has really not done anything, or possibly JSW Steel. Very little to choose from, but I'd go for either one of these two, Navneet.
All right. Dharmesh, you want to come in on the metals pack? Of late, the stocks have not been doing all that badly, and for Q4 as well, expectations are that you might actually see a turnaround for some of these cyclicals.
Yeah, definitely. I think there's a trade up there for metal counters. These are already cyclical plays. So like data, as you pointed out, from China has been good, and there's expectation that prices will go up.
Dharmesh, I'll have to come in out here because the IMD pressure has started, need to cut across.
And for second half of this monsoon season, country as a whole, you can see that most of our forecasts were within the forecast limits. And if you observe forecast issued, and if you compare the performance of the models, operational forecasting system, since 1988 up to last year, you will see that last 12 years, our error in the forecast is about 5.95%, compared to the earlier 12 years, which was 7.94 for the period 1995 to 2006, which means that since we have implemented the new method in 2007, there is about 25% reduction in the absolute error of the All India forecast. So these are the 5 predictors that we use to issue forecast in April, and these are the geographical region from where these predictors are being taken, and these are the period pertaining to the predictor. So this is the symbolic method used for the SCFS. If you have got 5 predictors, we prepare all possible models, MR models, based on this 5 predicted. Similarly, PPR models, projection pursuit regression models, and out of the 62, best few models are taken, and ensemble average of these best few models are taken as the final forecast. So this is just a simple methodology used here, and this is the performance of this methodology for the last 38 years or so. So you can see that this methodology has been able to predict extreme rainfall in most of the years correctly. and RMS is around 6% and CC is 0.7%, C 0.7. And this is about MMCFS, monsoon mission CFS. This is the performance of the model. We have got a moderate skill for this model for predicting the monsoon rainfall. And here we will be making presentation based on the February initial condition forecast. That is using 47 ensemble numbers. Coming to the various important factors that impact the monsoon each year or year-to-year variation of the monsoon. As you know, the ENSO is one of the most important. Another is IOD. So El Nino or La Nina, they are the two opposite phases of the ENSO. Is an abnormal condition over the equatorial Pacific ocean with the warming during El Nino and cooling during La Nina over the central and east Pacific.
Okay, we'll of course cut across once they do give the forecast and do mention about what are the likely scenarios going to be, whether it is El Nino and whether the long-term forecast is different from what SkyMets is. We'll anyways cut across when the Met Department starts talking about that. Quick thoughts out here on stocks which are doing very well. Kotak Bank is up 1.8% or close to 2%. Bharti Airtel 1.5%. There are 2 or 3 names which are seemingly doing rather well for themselves in the session today. Private banks, Dharmesh, Kant have done extremely well. If you were to choose one large private sector bank for investing right now, which one would that be?
I think Yes Bank. So as far as valuations are concerned, it's steeply at a discount to its peer, and I think the numbers will continue to be very robust. The new management is rolling out things very smoothly, and when they report their numbers this time, we will see slippages coming down, NPAs getting improved, and the AUM growth would be in excess of 30%, and 35% is the profit growth which we are penciling in. So there's a lot of value left there. 340 is the target price which we are expecting for Yes Bank in a one year's time frame. So that remains a very good bet in the current scenario.
Okay. The other thing is what's happening to the index gainers as the index is okay, still at the same levels, but Tata Motors and TCS are having some remarkable moves. 7.5% for Tata Motors and nearly 5% for TCS. Hemen, you want to come in? And this strong move that we've seen today, you reckon that this can continue tomorrow?
TCS, yes. Tata Motors, there's nothing wrong. Evidently, we've seen a longer term technical turnaround, Neeraj. So, but I'm not sure near term how it's what it's doing. But as far as TCS is concerned, I think we're breaking out from an ascending triangle on the weekly chart, Neeraj. This is a very interesting phenomenon, and this is happening after almost 12 to 14 weeks, Neeraj. The breakout level was 2100. We're comfortably placed above that, and the volume is 80 lakhs, which is significantly high.
Okay, let's go across. Now we're having the forecast from the Met Department.
So this actually shows 3.4 is weakening as the monsoon, going through the monsoon season. So similar, you can see the decrease in the 3.4 SST anomalies also can be seen in the NSEP CFS2 also, and the similar is the signal in the IRI forecast based on various models. And you can see the last 15 El Nino years since 1951 there were 3 weak El Ninos. You have got a mixed result. You can see 53 we had 110 and 69, which is most closest to the present situation, it is 100, and in 2004 where in the later part of the monsoon season El Nino had strengthened, it was 86.2. But however, again I want to insist that there is no one-to-one association between El Nino and the monsoon rainfall. And coming to IOD, MMCFS forecast shows that the current neutral IOD conditions will go to slightly weak positive IOD conditions during the monsoon season. So you can see that probability of positive IOD is more during MJJ and the JJA. Slowly thereafter it decreases. Thank you.
Thank you, sir.
That is the IMD's forecast. This time around they're talking about the El Nino the effects of which is likely to taper, according to them. We'll wait and watch for a clearer update and once that release comes out to get more details on the same, but that's what we're getting from the presser that they just held. Tata Motors continues to be the top slot on the Nifty. It's up 7.5% now, so big moves coming in there at the highest point of the day for Tata Motors. And remember, the stock has had a spectacular run from the lows that it clocked in post its Q3 numbers. Closer to 150 odd is where it was at, and from there it's just remarkable to see the stock move the way it has. 232 on the stock right now. TCS 5%, and for a large cap IT name like TCS, this is a big day. 2,116 is where TCS is, and all the other Tata Group stocks as well, so Tata Steel as well, joining the bandwagon, 3.5% higher. It's time now to, however, take a look at what dealing rooms are recommending. Yatin Mota and Darshan Mehta are here with their channel checks. All right, I think they started with the press conference, guys. I'm so sorry, we'll have to come back to you in just a few moments. But I think let's cut across back to Delhi, where the IMD presser is on.
Fall is likely to be 96% of the long period average, with a model error of plus or minus 5%. As all of you know, that the LP of the season for the country as a whole, 96% of long period average, and as you know, the long period average of the season is, if you take the data from 51 to 2000, it is 89 centimeter. As Dr. Pai has described to you, the weak El Nino conditions are prevailing during the current season over the Central Pacific, but all the models, especially the coupled climate models, are suggesting that the El Nino conditions are going to weaken further during the subsequent seasons, and so we don't expect a very severe adverse effect from El Nino in the ensuing monsoon season. Therefore, our forecast is very clearly suggesting that we'll have a near normal monsoon this year. And however, as seasonal-based conditions over Pacific as well as Indian Oceans are very important, so IMD will be very closely monitoring this SST conditions over the two oceans, especially Pacific as well as Indian Oceans, very carefully for the next coming months. So overall, the country is expected to have a well-distributed rainfall scenario during the 2019 monsoon season, which will be very beneficial to the farmers in the country in their farming activities during the ensuing Kharif season. As all of you know, that we will be coming out with the second stage monsoon forecast sometime in the last week of May or first week of June 2019. So with this, I will request now Dr. KJ Ramesh to read the operational part of the long range forecast in Hindi. Subsequently, afterwards, we will take up some few questions from you. Thank you.
धन्यवाद सर. जैसा
All right, near normal monsoons as per the IMD, 96%, 3% higher than what Skymet had projected in its forecast just a few weeks back. So well-distributed rainfall, that's what you can expect, but the IMD is going to closely watch out for developments over the Pacific as well as the Indian Ocean. So we'll keep track of that. But back to Darshan and Yatin, they waited patiently till we heard out the IMD chief. Thanks, guys. Let's start off with you, Darshan.
Yeah, so Dcp Bank is something that dealers are talking about. It's down in today's trade. It's down 3.5%. The general sense that we're getting it ahead of the numbers over the next few days, the numbers this time around will be on the weaker side. It's moved down on decent volumes. Almost 3.2 million shares have already been traded and trading pretty much at the lowest point of the day. So there is negative traction on Dcp Bank. The other counter in which dealers indicate that there is momentum is Vodafone Idea. Some of the dealers indicate that some of the domestic funds are accumulating with the rights issue. They believe it's favorable this time around. So that's something that they're betting on. And the last stock that dealers talk about is Godfrey Phillips trading at record highs again. Dealers indicate that probably the momentum will continue on the higher side for the counter. But Yatin, what are you hearing?
Kotak Bank, that is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. 2.5% up for that one. Dealers on the basis of F&O trends are recommending Kotak Bank at this point in time. Good volumes also there in the counter today. DLF also in the real estate space is something that dealers like. Of course, domestic funds are said to be buyers here. Ever since the block deal has happened, you have seen a 10% kind of a correction there. Probably stock is expected to bounce according to dealing rooms, and the dealers. And finally, Himmat Singha seed is something wherein dealers do indicate that there is a lot of HNI traction in the counter. From here on also, dealers do expect good returns in the short term from the mid-cap side of the trade.
Okay, Yatin, thanks a lot for that. Just before we start taking closing strategies, Hemen, Kapadia, Yatin was talking about Kotak Bank. That was your top call as well. Do you think it can do more?
I think so. It can be a BTST also. It's a BTST. Neeraj, is a toss-up between Kotak Bank and TCS. Both look good, so I'd have both as BTST. Neeraj.
Sorry, okay. You're giving your BTST.
Yeah.
So you're doing Kotak Bank or
TCS.
TCS. You're buying both of them at the current levels.
Yeah, both are giving breakouts from ascending triangles on the weekly charts. I think the whole month they're going to do well, if not the next month.
Wow. So, Sumeet, very quickly, your top closing strategy.
Grasim looks good to me. One can initiate long positions in Grasim at the current market price, and from here on we can see a move till 880 or 890 levels. One can initiate long positions at the current market price with the stop loss to be placed at 845, 850 on lower side for the upside target of 880 and 890 levels.
Okay, so those are some closing strategies coming in from our experts. Pull up Gillette, that's touched 52-week high in today's session. I think it's up nearly 6 to 7% in trade right now. Not a very heavily traded counter. I would say only 14 to 15,000 shares are traded almost every day, sitting at high point of the day, 7,800. Dharmesh, we'll be getting numbers from the FMCG pack as well. What are the expectations this time around? And if any specific view on a stock like Gillette, which has touched its 52-week high?
Yeah, FMCG as a pack is likely to do well when they report their Q4 earnings, and Q3 was also good for most of these companies. So we think HUL will stand out in the entire pack with a volume growth of in excess of 10% and a blended realization growth of around 2 to 3%. So net at 12 to 13% kind of a top line growth which we are penciling in for liver. At the same time, operating margins would be good because the input cost is likely to be lower this time around, with few of the key input materials being at a lower realization on the international price front. And operating efficiencies, the market capture has been well. They have been able to ward off the threat from Patanjali well. In fact, the entire market has grown, so everybody has gained the market share when Hinds Liver has been doing exceptionally well. So we have a buy recommendation on that. We have been recommending to our clients to accumulate that. Our price target for based on FY20 earnings estimate is around 2100 for Hinds Liver, and that again is around 60-65 kind of a PE multiple, which is a fair multiple for HUL, considering the fact that ROE is in excess of 70%. Apart from that, Dabur, Imami should do well. At the same time, likes of Nestle and Marico will also report a good set of numbers. So entire pack looks good. Gillette I don't track very closely, so won't be able to comment on that.
The other thing, guys, is to wonder now what will happen to monsoons, because it will have a big bearing on sentiment, if not actual numbers. The only problem with IMD's forecast is that the last 6 years that they have made these predictions, the error, save for 2017, has been very, very stark. 6 to 7%, the quantum of miss or the actual rainfall versus IMD's forecast. So it's good to see that it's not 93 and 96%. I don't see the markets taking any kind of a relief move out of this as well.
Yeah, actually, he stated over the last decade it was 5%, around 5%. The error.
The error, yeah, that's the point.
Which was improvement, a stark improvement from the previous period.
Yeah, but one only hopes that it is actually 96% and not too much, because sentimentally it'll have a big bearing on what the markets do as well.
Yeah, but there's no major reaction seen. I think the markets are still holding up to the levels they were when we started the show. But quickly, I just want to get views on few stocks before the market closes. Pull up Matys and Sumeet. And Sumeet, I want to come to you for this one, 3.5 to 4% high. I guess last week there was some brokerage report indicating they'd lowered the target, because of which there was some selling pressure. But it's back now in the green at levels of 155. Would you initiate any trade here?
It's a buy in Matys and Sumeet. Immediately the stock has some resistance at around 156 levels. Once the stock is able to break 156 levels on closing basis, we will see a very good upside move, in which we can see a move till 170 levels. That would be the immediate resistance for the stock. A closing above 170 will trigger fresh buys for the stock, and on higher side we can see a move till 190 also. Now immediately, if anyone wants to initiate a position at the current market price, that should be On buy side, with the stop loss to be placed at 149 levels on lower side for the upside target of 165, 170 levels.
Okay, I want to just pull up Godrej Properties once. The stock has moved up 5.5% in intraday trade, now at 958. So that's the high point of the day. And remember, if you look at the analyst recommendations on the Bloomberg terminal or the ANR function, you'll see that the return potential is a negative 17%. Why so? Because the stock has really run ahead over the last few trading weeks, and you can see it making record highs day after day. It saw a period of 2 or 3 days where it saw some profit taking, but it's back with a bang. Today's session, yet again, volumes have picked up and the stock has moved up about 5.5%. Dharmesh, before we let you go, real estate is a pocket in Godrej Properties in particular. How do you expect Q4 to shape up?
I think there has been a trading rally happening in the real estate pocket, primarily because of one is that interest rates have been cut twice, so some comfort out there. But still, I don't think the things are over for real estate as a space. Prices haven't picked up in any of the cities. If you go for deal negotiation, you get a 10 to 15% kind of a discount. Godrej Properties is a good real estate company, but given a choice, I would choose Oberoi Realty rather than a Godrej Property. I think the only value, deep value, if you look into, so Oberoi Realty stands out as compared to Godrej Properties. So if I have to buy a real estate stock, it would be Oberoi Realty. I'm expecting around 20-30% kind of stock price movement in next 1 year in Oberoi Realty. So that's the topic for me.
No one talks DLF. That's the interesting bit. Here is a company which is arguably one of the largest, has deleveraged completely, and is in a market where there aren't enough players as competitors. Should be interesting.
Yeah, the stock actually went up to about 196 odd, meant post 200. I think the target by one of the brokerages was somewhere close to 226 on the stock. Didn't quite get there, but the stock, after touching, I think 196, 200, came back down.
Just from trading perspective, it's in the F&O band for the day, and I was just checking the data. It might come out because the total DLF? Open interest as a percentage of MWPL, as in Friday's close, was 80 point something, and for it to come out, I think it has to fall below 80. So clearly, there's some bit of unwinding. It could come out of the F&O band for tomorrow's trade.
Watch out for that as well. Dharmesh, take a moment to thank you, of course, for joining in today. But Sumeet Bagadia, very quick thoughts. DLF, how does that look on the charts?
I think it is already, it's done with the correction. Now I think it's time to initiate long positions in DLF. It has again moved over 200 DMA levels. From here on, we can see that the stock is headed higher, and in charts it suggests a buy. For the targets of around 190, that would be the immediate target. A closing above 190 will take stock prices to 200 and 205 levels. So it's better to be on buy side in DLF, with a stop loss to be placed at 179 levels on lower side.
All right, gentlemen, stay on. We'll start wrapping up the markets. It's not a bad day. We're closing almost at the levels where we started off the show. You would argue that with the Nifty Bank doing 0.5% and the IT index doing 1%, maybe we could have bargained for more. Having said that, I don't think we will be too unhappy because the world markets were a very quiet place today. So we've done well. The mid caps and the small caps will come up on your screen, and those indices too have done reasonably okay, about 0.5%. It's a day which would probably give bulls and bears equal ammo for the trades that they would have taken. Let me talk about the large caps, and then we'll talk about the mid caps and the small caps as well. Navneet should be joining in to talk about that. But first, the large caps. Tata Motors about 7.5%. This is that one big mover in trade, but I would reckon that the credit should go to TCS. Arguably will be the highest contributing stock today. Coal India, not bad. Kotak Mahindra Bank about 2.5%, decent showing. And Hero MotoCorp amongst the auto stocks, giving company to Tata Motors. Down below, JSW Steel has not done too badly. So the steel stocks in today's session have done reasonably okay. What's not done well? Infosys, on the other end of the spectrum, 2.5% lower. Sun Pharma, 1.5%. BPCL about 1%. ONGC down about 0.5%. HDFC and ICICI Bank are the two financial names that haven't quite done well. But largely, it's all about TCS on the large cap space. But mid caps, Navneet, flurry of activity, lot of volume action as well. What's standing out for you?
Well, standing out today was clearly the Tata Group company. So mirroring the Tata Motors gain was also Tata Motors DVR, which rose as much as 7% in today's trading session. It's closing almost at the high point of the day. So watch out for that one. And Idea is the other one. Remember, the rights issue is on, and the news of promoters now increasing to subscribing from 18,000 to 20,000 crore of that issue, 5% higher for Vodafone Idea. Matys and Sumeet, remember last week HSBC had cut down the target price for this one. There was some bit of negative news, but now it's closing at high point of the day. That's technically looking good, 4%. That's what our technical experts suggested. Indigo is the other one which perked up in today's trading session. Indigo closing with gains of nearly 3%. Well, my list is actually dominated by gainers. PC Jewelers, that's the one which has been moving higher in the last few trading sessions. 13% high for this one. Fresh long seen. Infibeam is up 20% for at least this month, and for the day it was up almost 10%. At 52-week high, you had players like Gillette India, which rose today, up almost 7% in trade. Something like Godfrey Philippe, all of these MNCs were moving around today, 7% higher for this one. And something like Relaxo too, that went up in trade, and the volumes were pretty decent for Relaxo, but I think it came off as well. Losers were Dcp Bank. I think we covered this in our dealers check as well, where fresh shots were being witnessed on the futures side, down closing at low point of the day. And also something like NCC, that didn't have a great day in today's session, so NCC was down almost 2 to 2.5%. Devina.
Well, you know, like you rightly said, if there are so many stocks within the positive territory, the advanced decline ratio and the market breadth definitely supports that as well. But that's how we are set up for close this afternoon. So banks doing well. You've got the mid caps, small caps doing well. Quickly pulling up the broader market breadth to see how the advanced decline ratio is stacked up by close, and that's what you've got. Right from the word go, nothing much has changed. Just slight petering off towards the end, but by 900 stocks advancing versus about 600 stocks that declined.
That's right. In fact, the market breadth, I think throughout the session, as the chart is indicating, was on the positive side. But let's just pull up and see how the participations panned out today. Remember, it's a truncated week, only 3 trading sessions. So whether participation was on the higher side or lower side, that the market turnover will tell you. And clearly, though the markets started off this week on a good note, but the participation, Devina, looks like on the lower side.
You know, in fact, Navneet, 30,000 has probably become the new norm. Yeah.
Oh, I think it reached levels of 35, 36. I'll have to refresh my memory.
This has actually become the new norm.
Okay.
And
F&O is lower for sure, yeah.
So that's what you've got. And the contributors on the index, just quickly pulling that up. So you've got the IT stocks and the banking stocks that are doing most of the heavy lifting in today's session. TCS right at the top. Kotak Mahindra Bank, HDFC Bank, and Tata Motors doing really well, but still just adding 7 points because of its weightage being slightly lower.
Yeah, I think for tomorrow's session now, we'll have to see whether we can conquer the all-time high levels of index, which is somewhere about 11,760. I think we couldn't touch that level in today's trade.
Yep, that's what you've got. Let's get in some closing comments then from both our technical experts, Hemen as well as Sumeet Bagadia. I'll start off with you, Sumeet. Your all right, I'll go to Hemen. Hemen, your closing thoughts, and as we step into trade tomorrow, what would the setup be like, and what was the most important thing you'll be watching out for?
Yeah, market has shown surprising resilience, Devina. We're at 21 VIX, and you have stocks flying all over the place. So I guess it's better to be script specific. Nifty remains in a range between 11,550, 11,753. A breakout of 11,753 would mean a sharp upside. So things are fine. It seems a slightly overbought, but I would still say script specific is the way ahead.
Sumeet, what about you?
Well, markets are looking strong to me. Today's closing is suggesting that Nifty should break the levels of 11,750, and from here on we can see a move till 12,000 levels. I think those who have taken long positions, they should hold on the existing long positions, and if there is a dip of around 30 to 40 points from present levels, then that should be used as a buying opportunity. And from here on, we should see a very good move, in which in next couple of days or in next 1 or 2 weeks, we can see a move till 11,900, 12,000 levels also. It's a buy from my side.
All right, gentlemen, we'll leave it at that. Thank you so very much, Sumeet as well as Hemen. Appreciate both of you taking out the time and joining us on the show this afternoon. All right, it was a packed show this afternoon. So take time out to thank everyone for tuning in, from Navneet, Neeraj and myself. Thank you so very much for watching.
The market wrap comes up next.
What is the